This is me in hell, slaving at a job that I absolutely hate, something that a lot of you are still doing. You're waking up every single day against your will as if you sold your soul. It's depressing. What's even more depressing is that my alarm would wake me up every morning to go to this plantation, and before I got out of bed, I would check my phone and I'd be up another $300 to $400. And I'd ask myself, why am I forcing myself to go to this hell every single morning when I'm making more in my sleep trading than I am at this job? So I quit. This is me in paradise. Only a few months later, doing a handstand push-up because I can, as I'm finally free and healthy in mind, body, and soul. I quit my job January 2023 and I have not worked a job since. And it's all thanks to trading. I realize though that not everyone is living in paradise. Most people still don't know that it's possible to live like this in 2024. Instead, most people are slaving away, working in hell for someone else's paradise. So I decided that I want to help more people find paradise, as the more people that are living in paradise, the more this world just becomes paradise. So in this video, I'm going to show you everything that you need to know to start funding your paradise using trading. Anyone can do it. You can do it anywhere, and all you need is a phone. Now, before I can start showing you how to make money, I have to explain what is trading. Now, there are different types of trading, but I'm going to keep this simple for you. I'm going to be talking about trading Forex because it's something that everyone is already familiar with. And you may be like, what are you talking about? I've never traded Forex before. Yes, you have. If you've ever traveled outside of the country, let's say, for example, you live in the United States and you travel to Canada. When you land in Canada, you're going to exchange your US dollars for Canadian dollars. You just traded Forex. That's what Forex is, the foreign exchange market. So how do we make money? Well, that's simple. Let's say you have $1,000 US and you want to convert it to Canadian dollars. Currently, $1 US is equal to 1.36 Canadian dollars. That means that if you exchange $1,000 US, you would get 1,360 Canadian dollars back. That exchange rate, which is how much $1 US is equal to 1 Canadian dollar, is constantly changing as the value of these currencies fluctuate with the economy of these countries. Okay, so if the US economy is doing really well or doing really bad, the exchange rate might change. If Canada's economy is doing really good or really bad, that exchange rate can also change. Okay, so let's say you don't spend any money in Canada and now the exchange rate is $1 US equals 1 Canadian dollar. It's just 1 to 1 now. When you exchange your 1,360 Canadian dollars into US dollars again, you won't get the same $1,000 US that you had gave them originally. Instead, you're gonna get 1,360 US dollars back. You just made money. And thanks to technology, you don't have to go to the airport and exchange your money. Now we can do it with just the press of a button on our phones. And don't worry, you don't have to be some economic expert to trade. I'm going to show you how you can predict whether the price of a currency is going to go up or down just by drawing some lines on your charts. All right, so now that you have a slight understanding of how trading works, now all I have to do is explain how to use the only two platforms that you're going to need. TradingView, which is how we're going to be reading charts and understanding when to buy and when to sell, and then MetaTrader 4, which is how we are going to be placing these trades and making this money. Let's start with TradingView. All right, so if you're serious about learning this skill and how you could possibly quit the job that you hate and learn how to make money from anywhere in the world, I'd advise you follow along with this tutorial. So you're gonna go to Google, you're gonna type in TradingView. You're gonna click this top one right here, and then you're gonna get to the home page of TradingView. Then I want you to go to Get Started. All right, and you're gonna click right here where it says sign up under $0 forever. TradingView is absolutely free. Do not have to pay a dime to use TradingView and make money trading. So click sign up. It's gonna ask you for your email, password, and ask you to create a username. Just do all of that and then create an account. Now, once you've created an account, it's going to bring you to this page where it's going to show you all of the plans that TradingView has. Once again, you do not have to pay for TradingView. You can still use the charts and make money trading. However, I would recommend later on in your journey that you consider getting the essential plan, and I'll explain why later. But for now, let's just go to the charts. So go to the top here where it says products and then go to super charts. And then it's going to bring you to the charts. Now, right now, this may look like rocket science to you, but I'm going to explain everything. But first, I want you to the top right corner and click this. And once you click this, a bunch of symbols are going to be showing here for a bunch of stocks, Forex pairs, cryptos. I need you to understand that TradingView is your one-stop shop for everything trading. So if I click this plus sign right here, as you can see, we can look at stocks like Tesla and Apple. I can look at cryptos like Bitcoin or Ethereum, and I can look at Forex pairs, which is where we are going to be at. Now, before I even get into this, I'm going to X out of this, and we are going to clean this up a little bit because TradingView has a bunch of symbols here that you don't really need to see right now. So you're going to go to the top right here where it has the X, and then you're just going to click that, click it again, just keep clicking it until they are all gone and there are no symbols right here, because we are only dealing with Forex right now. All right, so now I want you to go back to the plus sign, and then I want you to go to Forex, and now every single Forex pair is going to show up right in front of you. Now they're called Forex pairs because every single one of these symbols are two different currencies being compared side by side. Now if we look at the top one, it says EUR/USD. You may not know what that means. So the first three letters is the first currency and the last three letters are the second currency. So if we go to the right here, it'll tell me which currencies we are comparing right now. So this is the euro with the US dollar. Okay, if I look at GBP USD, this is the British pound with the US dollar. And if I just keep going down, I can go to USD JPY. What does that mean? It's the US dollar with the Japanese yen. Now, as you guys can see, there are a lot of Forex pairs. So you may be asking yourself the question, how am I supposed to know which one is the best one for me to trade? Because look, it's still going. The one that's going to be the best for you to trade, it depends on your schedule and when you're going to be available to be looking at the charts, so that way you could place your trades and make money. You just have to know when these pairs move. So how do you know when the pairs move? Well, the pairs move when the banks of whatever currency you're trading is open. So when the banks for the United States are open, that's when the US dollar is going to be moving the most. Same thing if I was talking about the euro dollar. Well, when the banks for the euro dollar is open, then that means it's going to be moving the most because money's being circulated. When money's being circulated, then the currencies are going to fluctuate up and down in price. So how do you know when one of these currencies are in session? Well, I'm gonna give you guys a little cheat sheet. So we're gonna go to babypips.com. I'll make sure I link this below so that way you guys can just have this as a quick resource you can use. So once you get to babypips.com, go to the top, go to where it says tools, and you're going to click on Forex market hours. So now it's going to bring you to this chart right here. All right, so how this chart works is it's always going to show you what the current time is in your time zone right now, and it's going to overlap with these sessions. As you can see right here on the side, we have the 4 sessions. All right, so we have the Sydney session, which is going to move any Forex pair that has the New Zealand dollar or the Australian dollar. We have the Tokyo session, which is going to move any Forex pair that has the Japanese yen in it. We have the London session, which is going to move any pair that has the euro dollar or the British pound in it. And we have the New York session, which is going to move anything that has the US dollar or Canadian dollar. But since America has most of the money, New York session is going to be where we have the most volume. You want to try to trade around this time. As you can see at the bottom right here, it will tell you where the volume is. That just means there's more people in the market, meaning this is where the money is at. So you want to try to trade around this time. This chart is also going to show you when each session is going to start and when it's going to end. So what you want to do is find when the start of a session is and when the end is, and you're just going to find which one aligns best with your schedule where you will be able to trade during that time. Once you find a session that aligns with your schedule, then you're going to trade a pair that is going to be moving during that session. So let's say you like London session, you like when it opens, you like when it closes, and you can fit in trading in during that time. Then you might want to trade something that has the euro dollar or the British pound in it, because that's when it's going to be moving the most. Now, to make it a little easier for you, I do have a resource in my Discord. Link will be in the description, where you guys can go to the Forex section right here, and I have made this chart right here where I tell you what session and what currencies are moving during that session. So if you're in my Discord, you'll have access to that. You can just download this. If you're not, just click the link in the description and just join. It's absolutely free. Now, instead of going through all of these Forex pairs and trying to figure out what works best for your schedule, instead, you could just trade my pair, which is going to be GBP JPY. Now, I live in the United States, but I'm still able to trade this pair because it moves basically all day, because we have the British pound, which means it's going to be moving during London session. It also has the Japanese yen, which means it's going to be moving through Tokyo session. And I'm also able to trade it during New York session because, as we all know, the United States has most of the money. So anytime New York session is open, a lot of the times, most pairs are actually moving. So I'm able to trade this essentially all day. So this is the pair that I trade. If you want to just trade what I trade, you can just go with that. My entire free course is actually based around this pair. Once I actually click that, as you can see, it pops up over here, and then you can X this out, and now we can click on it, and now we are seeing the chart for the British pound and the Japanese yen. As you can see, it'll also say it right here. All right, so now that we've cleaned up our watch list and we've chosen the one pair that we are going to be trading, now we can click this button again and we can close our watch list so we only see the charts. Now we clean up the watch list. Now we got to clean up the charts too, because TradingView will automatically have these volume bars at the bottom of your chart. So right here, if it's not open, you can click this little button right here and it'll open it up, and you're going to click this X right here. This is where your indicators will pop up, but we'll get into that later. All right, so now that our charts are clean, now we can start talking about trading and how we're going to make this money. But first, I need you to understand what you are looking at and how to navigate TradingView. So on this y-axis, it's always going to show us the prices. On the x-axis down here, it's always going to show us the day and the time that we are currently looking at. And on the side right here, we are going to have all of our tools that we can use to mark up these charts. Right now, I'm going to show you all my favorite tools, and then we're going to start marking up these charts, and I'm going to show you how we make this money. All right, so first, let's go to the second row right here. You're going to click that. I want you to favorite this trend line tool, and I want you to favorite this vertical line tool. Okay, now that one's done. Now I want you to go to the third row. You're going to click that, and then you're going to favorite this Fibonacci retracement tool. And then you're gonna go to the fifth row, this little symbol right here. You're gonna click this, and then I want you to favorite the long position. I want you to favorite the short position, and I also want you to favorite the price range. Then I want you to go to the next one right here, and I want you to favorite the rectangle tool, and then I want you to favorite this ellipse tool right here. And those are the only tools that you're gonna need. And then as you were favoriting these tools, they would pop up on this toolbar right here. Okay, this is what we're going to be using to trade. Now it's just easy access instead of you having to go through all of them and search for it every single time. All right, so now that you have your toolbar on your charts, now we can finally start talking about trading. Okay, so as you can see right now, we have these box and whisker plots on our charts right now. Some are green, some are red. Okay, but all you need to know is that green means buy and red means sell. So that means if you see a green candle, which is what these are called, that means we went up in price. If you see a red candle, that means we went down in price. So now we are essentially getting into candlestick anatomy. Okay, so like I said, green means buy, which means we closed higher than the open. Okay, we went up in price. We opened here and then we closed right here. The filled in portion of the candle is what I like to call the body, and the lines protruding from it are wicks. Okay, so the bottom of the body of a green candle is always the open. But what's the story of this candle? Well, we opened here, sellers got it as low as to down here until buyers pushed in, and we got as high as up to here. But then some sellers came in and we eventually closed right here. Okay, but we closed higher than the open, which is why this candle is green, because we went up in price. Okay, so now for the red candles, it's the exact opposite. Okay, so now the open is not at the bottom, the open is at the top because we went down in price. So the close is lower than the open. So what's the story of this candle? Well, we opened right here, and then buyers got it as high as up to here at one point until sellers came in, and we got as low as down to here until some buyers came in and we ended up closing right here. Okay, but since we closed lower than the open, the candle closed red because we went down in price. But how long does it take for these candles to open and close? Well, that depends on what time frame we are on. So if you look at the top left corner, we have this D right here. We are on the daily. So since we're on the daily, that means that it took a day for every single one of these candles to close. Okay, but here, let's actually click this real quick. Let's click the daily. And now when you click that, all of these time intervals are going to pop up. So what you can do is just favorite all of my favorite time frames. Favorite the daily, favorite the 4 hour, the 1 hour, the 15 minute, and the 5 minute. And that's all you need. And now, just like our toolbar, we have our favorite time frames that we can sort through from quickly instead of having to sort through this huge list. Since I'm on the daily, like I said, every single one of these candles took a day to close. So with trading, it's so cool because we are playing with time. So it's like a microscope. Right now I'm on the daily and I can zoom in for more details. So let me show you what I mean. So here I'm going to rewind time. This is an advantage of getting the essential plan I told you guys to get, because then you can rewind time and you can test your plan to make it better so you can make more money in the future. Okay, so I'm going to rewind time and I'm going to mark up this candle right here. Okay, that's one daily candle. I'm also going to use the vertical line tool so I know exactly where that day started. Okay, so that's one candle because we're on the daily time frame. So every single one of these candles took a day to close. Now what happens if I go to the hour? So when I go down to the hour, as you can see, there's a lot more candles being shown, even though on the daily it was just one candle. Because what we're doing now is we're zooming in on time. So on the daily, it's one candle, but then when I zoom in, now it's showing the 24 1 hours in that daily time frame. Since I'm on the 1 hour time frame, every single one of these candles took 1 hour to close. What happens if I go to the 15-minute time frame? Now we're getting more and more details, because since I'm on the 15-minute time frame, every single one of these candles took 15 minutes to close. Okay, what happens if I go to the 5-minute time frame? Same exact thing. We're seeing more and more details, because now every single one of these candles took 5 minutes to close. Now, the tricky part about this is that we have to flip from micro to macro. We have to know what the details look like, and we also have to know what's happening on the big picture. Okay, because if we forget, things like this can happen. Because even though it does look like we are going up, it does look like on the 15-minute chart we are going up right now. Look what happens. We start to crash down. How would you have known that it was going to go down like that? Well, now you need to understand what type of market you're in. Because yes, on the 15-minute, it looked like it wanted to go up. But if I go to the higher time frames, like the hour or even the 4 hour, as you can see, it looks like there's mostly red and it wanted to go down. So the 4 hour is going to have more power than something like the 15-minute time frame. So how do you know what type of market you are in? Well, that's simple. All right, so here I have the 3 different types of markets right in front of you. Okay, we have an uptrend, downtrend, and consolidating markets. Okay, so let's start with the uptrend. Remember, green equals buy. In an uptrend, you want to be buying because the market is going up. It's trending upwards. Now, an uptrend is characterized by higher lows and higher highs. What that means is, let's just say we start with this high and this low. Well, with this high, the next high that's created is higher than this high. The next high after that is higher than this high. And then with the lows, this low is higher than this low, and this low is higher than this low, meaning we are in an uptrend. So in an uptrend, you want to be entering in on supports. Okay, so what happens is this is a concept called support and resistance, where we will have these highs that at one point, price went down from it. It was a ceiling at one point. It was a resistance. Okay. And then once it broke past that ceiling, let's say this was floor 99. Now we're on floor 100. Okay. Well, once we come back to this ceiling of floor 99, it's now the floor of floor 100, and then we jump up again. Same thing here. We had another ceiling where we hit our head at one point, we went down, but then we smashed through like Superman, and now we're on another level of the building, and now the once ceiling is now our new floor where we can jump off of. Okay, so in an uptrend, you want to be entering in on supports, and you want to wait for these ceilings to break and become floors. Okay, enter in on supports. In an uptrend, you want to make sure you pay attention to these higher lows, because that means the sellers were not able to push it down further, meaning the buyers are most likely still in control. And now we also have downtrends. In downtrends, we want to be selling. Why? Because red equals sell. Okay, and the market is trending downwards. Okay, a downtrend is characterized by lower highs and lower lows. Let's start with this low and this high. Well, the next high is lower than this high. The next high after that is lower than this high. And if we look at the lows, this low is lower than this low, and then the next low is lower than this low. Okay, so that means we are in a downtrend. In a downtrend, you want to make sure you pay attention to these lower highs, because that means that the buyers were not able to push it any higher and the sellers are still in control. In downtrends, you want to enter in on resistances. Okay, these are going to be ceilings. Okay, so let's say right here we had a floor at one point. We had a floor like here. In uptrends, we would be entering in on this floor. But in downtrends, we're going to be breaking through these floors. So at one point, we jumped up from this floor, and then we broke through. And then once we broke through that floor, we're now down another level in that building. So now instead of being on level 100, we're on level 99. Then we try to jump up, and then we hit our head on the ceiling. And that's where we are going to fall down even further. We do it one more time. At one point, this was a floor. We did go up here, and then we smashed through it. Now we're not at level 99 anymore. We're at level 98 now. Okay. Well, then we try to jump up, and we hit our head on the ceiling of level 98, and then price falls down again. Okay, so in downtrends, we want to be entering in on these resistances. In uptrends, we want to be entering in on these supports. Now, in consolidating markets, we're not making lower highs and lower lows. We're not making higher lows and higher highs. Instead, in consolidating markets, we are staying at the same high and the same low. So in consolidating markets, what you want to do is you want to follow that cliche advice everybody always gives you about buying low and then selling high, buying low and then selling high, buying low and then selling high. That's how you make money in all of these different markets. So just remember, we want to buy in uptrends and we want to sell in downtrends. But the main thing is you want to make sure you look out for these higher lows forming in these uptrends, because that means that the sellers were not able to push it further and the buyers are still in control. And in downtrends, you want to look out for these lower highs, because that means that the buyers were not able to push it higher and the sellers are still in control. All right, so these are the 3 types of markets. And now that you understand that concept, now you'll be able to understand why the market went from going up at one point and then started to crash down. Well, because at one point we were in an uptrend. We started at a low, created a high, created a higher low, and a higher high. What does that mean? We're in an uptrend right now. Created a higher low, a higher high, but then look what happens. Because we start to go down, make a low right here, a lower high, a lower low, we're transitioning into a downtrend. A lower high, a lower low. So it makes complete sense why it started to crash down, but you wouldn't have known that if you don't understand the 3 different types of markets. But now you do. So now you're going to make money instead of getting fooled by the market. So this is how we actively trade with the markets. But you may be asking the question, how do we actually predict the market? Well, there's 2 different ways to predict the markets, and I'll explain this using the 2 different types of analysis. So back in the day, before they had technology, before they even had TradingView and could even look at charts, they had to use fundamental analysis. Fundamental analysis is just understanding the economy and then listening to the news. I think back then they would just be reading newspapers, and based on what they read in the newspapers and how the economy was doing, they would make predictions on whether a stock was going to go up or down. Well, we don't have to read newspapers anymore. Instead, we have something called forexfactory.com. I'll make sure I link this below too, because this is a resource that you guys can also use. All right, so when you get to this page, it's going to have a lot on it, but all you need to worry about is this section right here. So it's going to have today's date, it's going to have some times, it's going to have some currencies, and it's going to have some folders. So essentially at forexfactory.com, this is where we get the news that they used to read in the newspaper. So instead of having to be an economic analyst, you just have to check forexfactory.com and you'll be able to get news about the economies of these currencies that may potentially affect it. So how do you know if it's going to affect it? Well, that depends on the color of the folder. So we're gonna have yellow folders. Those are low impact. They probably won't do that much in the market. You're gonna have orange folders, which are medium impact, and these may do something, they may not do something. So this is just like there's a chance there may be rain. And then red means there may be a storm coming, there may be a hurricane. These are things that could drastically affect the economy and how people view the economy. Things like unemployment claims. Because if unemployment rates are climbing, for example, then people are going to have less confidence in the economy and they may actually sell. If the unemployment rates are going down, then that could be good for the currency and then it may have a big spike up. So using this site is going to be very helpful, because instead of reading newspapers, all you have to do is check Forex Factory and know what time a big news event may potentially happen, and then just monitor the charts at that time. And if you can get in on the right side, you can make a lot of money really fast. Let me actually show you what these red folders can do by using an example from a red folder that happened yesterday. All right, so I rewind the time to December 20th at 2 a.m., which is the same time, December 20th, that this red folder was supposed to hit for the Britain pound, which will affect this pair. So I just want to show you guys what a red folder can potentially do. So just watch this. Do you see how big? Do you see how many people just started selling off as soon as 2 a.m. hit, which is when this folder was supposed to come out? Let's see exactly how much that is. That is over 10 times your money. So if you put in $100, you would have made $1,000. Okay, so you can make a lot of money from those red folders, but be careful, because if you're on the wrong side, you can also lose money really fast too. All right, so that's how you predict the market using fundamental analysis. But I did say that is another type of analysis, and that is technical analysis. What is technical analysis? That's everything I've been showing you so far in TradingView. That's just marking up your charts and then making predictions based off of those markups. We all know the saying that the past repeats itself. And the only reason this market moves is because humans are putting money into the market, and humans are creatures of habit. So they repeat the same patterns and same behaviors over and over again. So remember, I taught you guys about support and resistances, right? So all I have to do is understand that, let's just say this is present day. I did rewind time again, right? Let's say this is present day If I go to the left, I'm going further into the past. As you can see right here, if you look down at the bottom, it says this is December 1st. If I look over here, this is November 29th. Okay, so I'm looking into the past now the more left I go. So all I have to do is understand that the past repeats itself. So if I look here, I see that people sold here, people sold here, and people sold here. So it seems like sellers just want to come in every time we get to around this price area. So that's where we'll grab our toolbar, and I'm going to use the rectangle tool, and I'm just going to draw a general box around this area, and we'll just make it red, because remember, red equals sell, right? Since people sold here in the past, they sold here in the past, and they sold here in the past, my prediction is that based off of the past, it's very likely that people may try to sell in this area once again. So then all I'm going to do is I'm going to place a trade right here. So I'm going to grab this short tool. Short position means we're going to try to sell. Long position means we're trying to buy. Okay, so we're going to use the short position right now. And I'm going to place this right here, right? So now what this is this is how I'm going to be able to measure my risk to reward. So let's just say I'm going to leave my stop loss right here. And then where do I want to take profit? Well, once again, same rule, what the past repeats itself. So let's just say I'm going to aim for like right here, because I see that people bought in the past right here, and it was a really big move. So I'm going to look out for this area. So I'm going to grab this rectangle tool again, and I'm going to draw another general box in this area. I'm going to make this one green because I expect maybe buyers may come in this area. Okay, so now this would be potentially my trade. Okay, now this would be my risk to reward, which is really good. You want to make sure your risk to reward always looks like this, because right here, this orange section is how much I would be risking. This greenish blue section would be how much I would be making. Okay, so now you probably don't know what the numbers are. Okay, so now I have to teach you about pips. Now pips is very simple the way I explain it, but after this, go on YouTube, try to look up how people explain pips. They overcomplicate it for no reason. So here, I'm going to grab this ruler tool right here, and I'm going to just measure my stop loss, right? So right now it says 30, right? I'm always looking at this number all the way to the right here. It says 30. Think of pips as a multiplier, and every 10 pips is going to be 1 times your money. Pips is just a multiplier, so you know how much you may potentially lose or how much you may potentially make in the market. So this is my stop loss. The stop loss is just saying this is where if the market goes over to here, I think I'm just wrong on the trade and I just want to get out of the market. Okay, my stop loss is 30 pips. It's an easy rule of thumb. Divide this number by 10 always, and then it's going to be a 3. So I'm risking 3 times my money, whatever I decide to put into this market. Now, how much am I making? Well, I'm going to look at this number again and to the right. If you don't like how it looks on here, you can always grab the measuring tool and you can just do the same thing, but we're just going to round that to 100. Once again, divide that by 10. So I'm going to be left with 10 times my money, or how I like to say 10x. Okay, so whatever I decide to put in right now based off this risk to reward, I'm risking 3 times my money to potentially make 10 times my money. I'll take that risk to reward any day, because I could lose 3 times in a row, and one win like this, if I keep this risk to reward the same, will make up for all of those losses. This is how you stay in the game. You're not going to win every single time you trade, and this is why you need to have good risk to reward, because one win can make up for all of your losses. Now, just because I put this on my charts, does that mean I place a trade? No, I didn't place a trade. Now, this is where we're going to go to the other platform I told you guys that you guys are going to have to use, MetaTrader. All right, so now you're going to grab your phone and you're going to go to the App Store or Google Play Store. You're going to go to the search and you're going to type in MetaTrader 4. Now, when you type in MetaTrader 4 and 5 is going to pop up. I like to use MetaTrader 4 because it's been around the longest, and most traders who have been in the game for a while will tend to use MetaTrader 4. I already have it, so I don't have to install it, but if you don't have it, install the app, and then you're just going to click open. Now, when you click open, it's most likely going to bring you to this page right here. So what I want you to do from there is just go to the settings, and then you're going to click at the very top, or you're just going to click new account. Okay, click new account, and you can either open up a demo account or an existing account. Okay, so if you're a beginner, I would recommend you start with a demo account, but at the end of this video, I'm going to show you how to open up a real account so you can start trading using everything I've taught you in this video. So here we're just going to open up a demo account. Just use meta quotes, and you can name it whatever you want. I like to manifest, so I'm going to use $1 billion trading plan. And then for the leverage, just use 1 to 100. And then for the deposit, always choose the lowest amount, because even though this is a demo, we want this to feel as real as possible. Okay, and then all you got to do is just click register, hit done, and now you have an account. It should bring you to the quote section. Make sure you switch it from simple to advanced so that way you can see all of this. One thing I want to show you guys real quick is just how the charts look on MetaTrader. This is why we do not trade on MetaTrader and we use TradingView, because these charts are going to confuse the out of you. But let's just say we were trying to enter in this trade. We're trying to sell right now, right? So what we'd have to do is we'd have to go down to the bottom, click trade. We'd have to click this plus sign right here. And then we would have to click at the top where it says Euro USD, and we would try to find the Britain pound with the Japanese yen, which is what we are trading right now. And as you can see, it's not there. So what we have to do is go back, and then we're gonna go to quotes, and then press this plus sign right here. And then we're just gonna type in GBP JPY, because that's what we're trading, right? So now that I added that, now it is added to my list. If you want, you can even delete all of these extra ones if you're not going to use them. So that way it's just easier for you. So I would then click on this and I would click trade. All right, so when you hit trade, it's going to bring you to this page right here. Okay, so at the top here it says instant execution, and that's checked right now because most of the time you want to have it be instant execution. That means that whenever you press buy or you press sell, you immediately just enter the market. Okay, the other types of trades are market execution. That just means that you're going to say a certain price, and then when the market gets to that price, then you're going to hop into the market. All right, so a buy limit just means that the market is going down and you believe at a certain price it's going to reverse. So as soon as it goes down and it hits that buy limit, you're going to go in for a buy. Okay, a sell limit is just the market is going up, but you believe it's going to reverse. So you put in the price where you believe it's going to reverse, and then as soon as it hits that price, you're in for a sell. A buy stop just means that price is going up, you believe it's going to continue, so you tell the market at a certain price you want to go in for buys as well. A sell stop just means that price is going down, you believe it's going to continue, so you tell the market at a certain price you're going to go in for sells as well. So those are the different types of trades that you can do, but for the most part you're going to be doing instant execution. Under instant execution, you can see that we have our lot size. This is our lot size. Okay, so you may not know how much to put in here, so I'm going to explain it for you. So right now I have 0.01 in. That is going to be $1. Remember how I explained pips right here? So remember, every 10 pips is 1x, whatever you decide to put in. I do it by every 10 pips because it makes it so much easier for you when you're calculating your lot sizes. So this lot size that I have right here is going to be worth $1. So that means that if I lose this trade, I'm going to lose $3 because our stop loss is 30 pips. So if I divide that by 10, that's going to give me 3x, okay, 3x. And then the x is going to be the amount that I put into the trade, which would be $1, right? Now, if I win this trade, how much would I make? Okay, well, once again, we have 100 pips here. Divide that by 10. Okay, that's 10x. So that means if I put in that $1, I would make $10 off this trade. Okay, well, we probably want to make a little bit more money than that. Okay, let's say I put the one right there. Okay, so now it's 0.10. Okay, that means I'm risking $10 per 10 pips. Okay, that means if I put this lot size for this trade, I would be risking $30 because once again, divide this by 10, that's 3x times that $10 I'm trying to put in right now, $30. I'm risking $30 on this trade. But if I win this trade, how much am I making? Okay, I'm making 10x. Okay, 10 times that 10, I could potentially make $100 off this trade. So would you be willing to risk $30 to potentially make $100? Shit, I'm taking it. And then we have the final lot size where we can put it on the other side of the decimal right here. This is what we call a standard. So when you put 1.00, that is worth $100. Okay, that means I'm risking $300 to potentially make $1,000. All right, so now that you understand the lot sizes, now I need to show you the stop loss. Okay, so stop loss is essentially what we have right here on TradingView. So what I would do is I'll just put my cursor right here so that way I can look to the right and I can see what price I have my stop loss at currently on TradingView. Okay, so we could just input that right there, 187.686, and then what's our take profit? Okay, well then we'll put our cursor right here and then we look to the right and it says 186.358, right? And then we would just hit sell, and that means we just placed our very first trade. Let's say we're just going to use the 1.00 lot size, which means we're going to be risking $100. But just remember, if we put in that 100, we're risking 300 to potentially make 1,000. I like the risk reward. I think it's worth it. So let's just say we sold that right now. What would happen? We just made $1,000. Let's see how long it took actually. In 2 hours. we would have made $1,000 in 2 hours. And that is literally how you would trade Forex. Just like that. It's that simple. You just made $1,000 in 2 hours. That's how easy and how powerful trading truly is. And all we did was look into the past. I didn't draw anything crazy on my charts yet. There's still so much more I need to teach you, but I'm just showing you how much money you can potentially make in a few hours instead of wasting 8 hours working full time at some job that you hate. Now that is everything that you need to know to get started on your Forex journey. If you got any value from this video, please do me a favor and just leave a like on this video. And here's a bonus. This is how you open up a live account. All right, so first type in forex.com into Google and then click on the website. Then hit open an account. It's going to ask you for your email address. Just put it in and then hit submit. Hit MetaTrader 4 for the platform. Spread only account for the product. Then it's going to ask for account information like your username, password, first name, last name, simple things like that. Just fill that out. It's going to ask for your home address and your social security number. Put that in as well. And it's going to also ask you for your financial details. So just make sure you fill this all out. At the bottom, it's going to ask for your trading experience. Put over 3 years so they don't restrict your account. Then agree to terms of service. It's going to bring you back here. Hit fund. And I went all the way down to the bottom. I used debit card transfer. It was the easiest one. We're just going to put in $100 for right now. Then hit next. Put in your debit card information. It's going to ask you to confirm you own this debit card. So hit upload card image. Scroll all the way to the bottom, upload the card image that's on your computer or phone. Now it's going to say that it's going to take about 48 hours to process, but it really took less than 12 hours for me to get approved. So don't worry, it's going to be really quick. Now, once your account gets approved, you should get an email that looks like this. It should say that your MetaTrader 4 account application has been approved from forex.com. Also, when you go to forex.com, you should see in your account section that the money is now in your account. Now they give you the server that you're going to log into and the username. Now you may not know where to go. So now what you're going to do is you're going to make sure you take your phone and you're going to go to the App Store or Google Play Store, depending on what type of phone you have. And then you're going to type in MetaTrader 4. Okay, I already have the app, but make sure you download that and then you're going to open that. Now, once you open it, you should get to this page right here. Then all you got to do is click the bottom right where it says settings, click all the way to the top right here. And where it says accounts, you're going to hit this plus sign. Then we're going to go log into existing accounts. Now for server, go back to the forex.com page. Then we're going to put in the server that they gave us. Okay, so we are looking for forex.com live 125. Okay, perfect. Now for the login, they give us a login as well on forex.com. So we're going to put that in as well. And for the password, put in the password that you'll use to sign in to forex.com with. And voila, you are in the account. So this is how you open up an account with forex.com. As you guys can see, it was very easy. And now your only job is just to create a plan, to choose a pair that you like and that you're going to trade that works with your schedule, to choose a pattern that you're going to use to enter the markets with, choose the time frames you're going to use for structure and your entries, figure out how much you're going to risk per trade, create a trading routine because you should not be trading every single day, and then also understanding your own psychology, because 30% is what I taught you on this plan, but 70% is also psychology. So if you don't got your mind right, then it's going to be hard for you to be successful. But don't worry, if you're a member of my Discord, I go over all of these topics and I give you guys my entire strategy that I've been testing for over 3 years and already makes me money. So that way you don't have to waste months to years trying to figure out your own profitable plan. You could just use the same plan that I use and that already works and start making money with me. If you're not a part of our Discord community, then just click the link in the description, join Paradise. I also have a free course for you that's going to help speed up the process for you. It goes over all the basics so you can start forming your own plan. And if you just like the way I teach, then you can just become a member, unlock my entire strategy, and start making money immediately. I call out trades all the time in my Discord, so while you're learning, you'll also be able to make money when I make money. I wish you all nothing but success in 2024 and infinity. Until Paradise.